Welcome back everyone to Unconvention 2021. Our next masterclass is one of the most interesting ones focusing on lessons in scale, taking NephroPlus across the globe by Mr. Vikram Vuppala, founder and CEO of NephroPlus. Over to you, Vikram.
Thank you, Anuba. Thanks to the Willigrow team to facilitate this conversation. Can you guys see the screen?
Yes.
Okay. One second. Okay. So good to speak to all of you. I just want to share my thoughts on the NephroPlus scale-up journey. And Shashi Bhushan from Willigrow had asked me to speak. Happy to talk to all of you. And I'm really looking forward to the Q&A session where I would love to answer any of your questions. But to begin with, NephroPlus, many of you may not know about NephroPlus. We are the largest dialysis network in India, and we are the 8th largest in the world. It's an 11-year-old firm, almost 11 years old now. We currently operate 250 centers in 4 countries, India, Nepal, Philippines, and just getting started in Uzbekistan. And the interesting point about NephroPlus is we are a very distributed network. In fact, the most distributed healthcare delivery company in the country, where we are operating in 135 cities in India. That makes it quite challenging, but also the impact that we are making in making healthcare accessible and affordable in the non-metro cities in India is immense. So that gives us a lot of satisfaction. We are a fairly large firm from a human resource perspective, 4,000 teammates spread across these countries. We have been rapidly growing. We continue to grow at a healthy 50+% rate over the last 5 years as well. And we want to keep up as much as possible the similar pace over the next 5-10 years as well. We are backed. One of the key things which I'm going to talk in the next slide also is about the co-founder, Kamal Shah, who has been on dialysis for 23 years now. When I met him, he was on dialysis for roughly 13 years. And because Kamal is himself on dialysis for now 23 years, we understand dialysis patients better than any other dialysis network in the world. So that's one of our key sort of USP or differentiator or key strength, I would say. We are backed by marquee investors such as Bessemer, IFC, InvestCorp. We have very strong board of directors and scientific advisory board. The chief medical officer is the worldwide nephrology society president. So excellent academic background. And over the last few years, we have built the muscle of acquisitions as well. We did acquire Davita India about 2 years ago. And recently, 4 months ago, we acquired a dialysis network in Philippines called RCDC. So the plan is to continue to be dominant in India and also expand in 4 to 5 countries in the Southeast Asia, Middle East, CIS geographies. Roughly, the rule of thumb is less than 10 hours flying distance from Hyderabad. That's the high-level view of the business. Now, many of you must be wondering, why did we start NephroPlus at all? To give a quick background, I'm an IIT Kharagpur graduate and then spent about 10 years in the US working in healthcare consulting, working in a pharma company called Abbott, and working in, before NephroPlus, I was, after my MBA at University of Chicago Booth, I did a 2-year stint at McKinsey and Company in their strategy consulting practice. Post that, I moved back to India. And while at McKinsey, when I was doing research on what healthcare companies we can set up in India, my thesis was that India has 50 plus million diabetics and 75 plus million hypertensives at that time. This is 2010, and my strong proposition or thesis was that there must be a lot of problems in the ecosystem which a new venture should be able to plug and create impact. So that was the whole thesis, which is diabetes and hypertension disease burden ecosystem. What can we do about it? In that process, when I moved back from the US, I had four ideas, one of which was a dialysis network. One was around diabetes clinics, a network of clinics. One was about online selling of chronic medications like glucose strips, blood pressure monitors, and so on online. And there was another healthcare distribution idea. And with these four ideas in the armor, I came back to India roughly 11 years ago and started traveling all around the country. Uh, traveled for about 45, 60 days, met a lot of venture capitalists, hospitals, doctors, understand where the opportunities lie. And when I moved back, the very next day, I met my co-founder, Kamal, and he was really inspired with Kamal's story that he has seen all forms of dialysis. He has received a transplant. He knew all the pain points in the ecosystem, in the dialysis ecosystem. And I thought if I could partner with Kamal, and if the co-founder is himself on dialysis, then nobody else in the world will be able to understand the patient needs, wishes, and wants as well as we did. So that's how the NephroPlus got conceptualized, and I invested some capital, raised some angel money from my McKinsey booth and IIT friends, and we set up the first couple of centers, and then sort of we realized that there is so much opportunity to change the way dialysis is done in India, and that really started the whole momentum towards NephroPlus expansion. We wanted to change the ecosystem from dialysis being almost like a death sentence to, hey, you can lead a normal life on dialysis if you get it at NephroPlus. That was the whole inception point. And of course, once we started the first couple of centers, we raised a venture capital round. Maybe I'll go to the next slide and share a little bit more. So that November 2011, as you can see, is when we did our Series A fundraise after launching 3 centers from Bessemer Venture Partners. And then we started a training academy. We started partnering with governments to or PSUs to set up dialysis centers. So we had very good growth trajectory, fortunately, over the last 8-9 years. We expanded from South India to West India, and then to North India, and then to East India over a period of time. IFC, World Bank, Venture Arm, they invested in us in 2014, and then another investor called C-Link invested in us in Series C in 2016. And in November 2019, we raised a sort of $45 million round from InvestCorp. We also gave an exit to one of our investors, and then continue to grow. So as you can see at the bottom of this slide, that in December 12, we had 8 centers, and then how we kept on expanding year on year. So on an average, these days, every year we launch about 40 to 50 clinics in India. And now with international, of course, we want to add international centers on top of India expansion. So international cannot compromise the India expansion story at all. That's the hypothesis. Let's see how that pans out. As I mentioned, about 5 months ago, we acquired a Philippines dialysis network called RCDC in September 2020. And in December 2020, 2 months ago, we signed a global tender with Uzbekistan, Ministry of Health of Uzbekistan, to run their entire country's dialysis program. So it was uh, pretty cool to take care of a country's dialysis program, which is big responsibility, but also big opportunity to make an impact. So the main model, the way we work is we partner with hospitals to completely run their dialysis program. So as I said, we have presence in close to 140 cities. We are preferred dialysis partner for all the top tertiary care hospitals in India, whether it's Max, Medanta, Fortis, PSRI, Ruby Hall, uh, Sayadri Hospitals, Medica Synergy in East, so on and so forth. So we recently expanded even in Northeast. Our first center was launched last month in Guwahati in Assam. Very excited about Northeast foray. We also are about to set up operations in Shillong in Meghalaya, which will be the easternmost point for us. About 6 months, 9 months back, we set up centers in Srinagar and Jammu, which are the northernmost points of operations for us. So right from Jammu, Srinagar to Alleppey in Kerala, right from Guwahati, Shillong to Vadodara in Gujarat, we cover pretty much the length and breadth of the country, which makes us the only healthcare provider which has been able to scale up across the country because of our standardized operational protocols, clinical protocols, and the way the model that has been refined over the years. We just replicate this model again and again. So right now, the out of 250 centers, roughly 240 centers are in India, and the remaining ones are outside of India. So I think one of the main things that I was supposed to talk about was also what are the challenges that I faced when we started NephroPlus 10 years ago. And as you can imagine, the first few years of any startup is quite challenging. It's a very intense, highly volatile roller coaster ride. You win a contract, then you lose a contract, you lose to competition times, you win a certain deal over the competition. So when your base is small, it's extremely volatile. Now, of course, because the base is large, it's not as volatile. But the first few years were definitely quite challenging. Um, Firstly, none of the co-founders was a doctor, so there was a lot of skepticism around, hey, these guys are trying to do something in healthcare, but none of them is a doctor. How will it work? So we sort of took it in stride and said, hey, we are approaching it in a very white paper manner. We are not so hung up. We will get the doctors in our advisory board and later on as our employees once we scale up, but we are looking at it purely from a patient and operations perspective. So there was a lot of skepticism, but we honestly didn't care that much. In fact, because we didn't have any past baggage in the Indian dialysis ecosystem, we could approach it with a very, very fresh set of eyes, which really helped us. We could innovate many things because we didn't have baggage, right? The second challenge was there were some pharma companies who attempted to do a dialysis network few years before NephroPlus started, and they all, after scaling up to 10 15 centers, they shut down. They could not scale it up. So the doctors, the nephrologists, and the various stakeholders in the ecosystem were like, hey, big companies have tried this, it's not going to work, right? So there are so many, as you can imagine, for any startup there'll be 95% of the people that you talk to will be naysayers, non-believers. We sort of took it in stride. We reached out to all these companies which started but failed, just to understand what went, what were the issues that they faced, and how we can solve for them as we scale up NephroPlus. So when you hear to all the founders or startups that are on this call, if you hear, hey, this was attempted earlier, not done, it doesn't mean anything. Just because someone did it, it doesn't mean that they gave the best shot. They gave it the time, effort, and sweat that you are intending to give. So we should just take it in stride, learn from that past experiments, and move on, right? Um, there were a lot of doctors who were accepting cash about 11 years back, and we said, hey, we are a professional company, we'll only pay by check. So some of the doctors even laughed, saying, hey, this guy comes from US and thinks that he'll be able to pay by checks in India. What is he thinking, right? So we again insisted, we lost business in the short term, but we insisted that we'll only pay by checks. Everything will be above board. Governance has to be intact. Of course, with paying by check, the tax implication will be higher, right? For the doctors, they'll be getting lesser money in hand as compared to cash in hand. So, but we persisted on paying in cash, paying in check. Now, I'm seeing few questions, but we'll address the questions once the session, my conversation ends. Um, we just kept it at it. We paid only by check, and in the long term, it has worked beautifully. Now the doctors know that NephroPlus is professional, and they will always pay on time by check, and we have built a reputation around that. Now, if for any startup, the uh, the I think with the ability to attract talent when you are running a very tight budget, it's going to be a Herculean task. So we imagine 10, 11 years back, it was not as, startups were not as looked upon favorably as today, right? So at 10, 11 years back, the entire startup ecosystem was very, very sort of in infancy stage, and people, the elderly were frowning upon people joining startups. My own parents thought that I had a midlife crisis, and so on and so forth. So attracting good talent in an early stage is definitely an issue, and without great talent you cannot really win a startup race, right? So that's a fairly big challenge. And ultimately, as founders, you have to be a great salesman, right? You have to sell the impact story, you have to sell the growth story, you have to sell the stock option story. We were able to sell to various teammates who were leaving big organizations and joining our startup, and they were all very happy, of course, later on. But in the early days, when your company is a tiny company, it's a Herculean task to attract great talent. But that's what founders have to do. They have to sell to attract great talent. There was a lot of skepticism about why would a hospital outsource dialysis when they can run it themselves? Why would the hospital acknowledge that NephroPlus will run it better and all that? But we have been consistently, with our existing partners, we were able to demonstrate that we can add immense value clinically, financially to the hospitals, and slowly and steadily the sort of momentum built up, right? We started creating the whole dialysis outsourcing market, so to speak. There was also a lot of skepticism about if you partner with hospitals, they don't pay on time. How will you get your cash flows going, and so on and so forth. But we were very disciplined. We insisted on continuing to follow up with the hospitals for our payments, and I think it's not easy, but it's doable. We have tough time with few hospitals, but vast majority of them behave properly, professionally. Now, the reason I'm listing out all these challenges in the initial years is every startup, regardless of which sector, which domain, will go through this roller coaster ride. Will go through a lot of pushback from the system, because inertia is real. People don't want to change. People don't want to accept new models. People don't want to accept new people. So hence, the startups early stage, when you go through the barriers, you will 90% of the startups will fall through in this chasm of death, as shown on the left hand side image, right? So the trick is to, how do you overcome these barriers and then jump across to the right side where you start to scale up, right? And build a valuable, sustainable network, sustainable company. So the chasm of death is real. And we also, there were a couple of instances where we were really thinking that night whether the company will survive, but the next day everyone showed up for work, and somehow we just stayed at it. And people just showed up, we showed up, and we just kept on growing. So I think the key here is we just have to be resilient a lot, and be super passionate about the story, the impact that we want to make, and we will survive, right? There will be near death moments, but it's okay. I think uh, with those experiences you'll become much stronger. So that's the early life with a lot of challenges. Now, once we built a strong foundation in India, about few years back, we started dreaming about going global, going beyond India. And the interesting thing was, there is no healthcare delivery company in India who has successfully managed to run solid operations overseas. Pharma companies is different. I'm talking about healthcare delivery. Not a single company has been able to do it. So there is again this whole element of, hey, India, we know the country, we know the market. Outside countries, what do you know about these countries? There's so much risk associated with it. But again, we wanted to make sure that we have built this very sustainable, efficient platform in India, and we wanted, as co-founders, we wanted to make impact in other developing countries. It's risky, but we wanted to take few risks. We'll not bet the entire company on this initiative, but we are willing to bet few millions of dollars to try out different countries like Philippines, Uzbekistan, and so on. Uh, if it turns out great, we'll continue to expand. If it doesn't turn out great, it's a great learning experience for us. And the next country foray will be so much more optimized based on the learnings, right? Now, why is global such a tough thing, right? People, if they have done it in India, why not? Why can't they do it easily across the overseas market? Now, every country has its own market dynamics, right? It's just a different. Philippines is a very different country compared to India. Uzbekistan is a very different country. Imagine Uzbekistan, the language also is Russian, so you can't even communicate easily without a translator in Uzbekistan. The culture is different. The business practices are different. The professionalism is very different. So we have to do intense research into every single country that you want to expand before going there, right? The payers again are very different. For example, in India, majority is paid out of pocket by the patients. In Philippines, 95% is paid by the PhilHealth, the Ayushman Bharat equivalent insurance firm, right? In Philippines. In Uzbekistan, 100% is paid by the government, right? So the payers are also very different. So we need to understand the payer ecosystem very well, and then get into that market. The local market nuances are tough to decipher, right? Ideally, if you can get a local partner, like in Philippines, we acquired an existing network, and that target company still has minority stake in the NephroPlus Philippines entity. So there is alignment in terms of having their skin in the game, continue to have their skin in the game, and that local partner understands the local nuances much better than us being in Philippines. So wherever possible, aligning with local partner is very crucial. And again, the talent problem is perennial problem in India, overseas, everywhere, right? So getting very good talent is not at all easy. In India, it's not easy, but at least there is supply. If you look hard, you'll get it. In international, it's even tougher. So we have to figure out, if you're lucky, you will get a local manager who's really good. But if you want to plan for it better, you need to build a pipeline in India to sort of send them on deputation basis to other countries. So talent is a huge problem to solve. I think we have talked to various partners who have ventured overseas to learn from their past experiences, and we have the risk appetite to go for it. But it's still early stages for us in terms of going global. The jury is still out whether it will create significant value, economic value for us or not. But impact wise, we are able to bring in improved clinical protocols in Philippines. We will offer the country's best clinical protocols in Uzbekistan, because the current system is really in shambles. So impact wise, we'll be creating amazing impact for sure. The value creation for shareholders, the jury is still out. It's too early to say whether they will be tremendously profitable. This is the sort of the overseas scale up nuanced insights. I think very quickly, if we need to summarize, right, from key learnings from our scale up story, there are these 4 ingredients for scale up success. The first one is, if you're not able to demonstrate sustainable unit model, there's no point in going global, in the sense that scale up in a very massive way. For example, even if you're losing 20, let's say 1 lakh rupee for every center every year, if you scale up to 100 centers, you will be losing 1 crore. If you scale up to 300 centers, you'll be losing 3 crores. So if the unit model is not profitable, then scaling up just does not make sense. You need to figure out how you will get to a profitable unit model and then start to scale up, right? Then the second thing I wanted to say is the systematization focus, wherein it cannot be person dependent. In the early stages of startup, everything depends on one person, the co-founder who is working on it, the senior person who is working on it. But as you want to scale up, the more you bring in SOPs, the more you bring in process, the better you are positioned for scale up. So if you are very people dependent, then it's very difficult to scale up. So whenever you want to scale up, you need to first put system architecture in place, SOPs in place, more professional system driven decision making in place before you start to really scale up. Third thing is, you need to continuously be able to attract exceptional talent to scale up, because ultimately, whether you are doing a tech product or a service product or a non-tech product, any industry, if you want to scale, you need good talent. Without talent, at the end of the day, it's not possible to scale up. So the company needs to be able to continuously attract exceptional talent, and also, of course, be able to retain them over a long period of time. That's very crucial before you embark on a scale up journey. Then the final one is, just a lot of patience is required from a scale up perspective. You will start to expand, there will be a lot of pushback, you will be learning. It's like a baby learning to cycle, right? You will fall down a few times and then you will figure out how to ride the cycle without falling down. So you just need to have the patience that it's going to work out. There'll be a lot of hiccups along the way, but just need to have that copious amount of patience. You also, depending on how much your business, how much capital intensive your business is, you also need to be able to raise funding, to do funding rounds for your company. So again, it's a double-edged sword. You raise money from private equity investors, they come onto the board, and then you have to you are answerable in a way to various questions that the investors may bring about, which is fair. Investors, private equity firms are borrowing money from limited partners and they're investing in your company. So they want to be on top of how their borrowed money is being put to good use in your company. So investors bring good oversight. They can share best practices. They can add value, but you need to have the maturity to deal with questions coming from investors. You need to be savvy enough to answer their questions in a timely manner, and just have a good working relationship with investors. So depending upon how much capital intensive your venture is, you may have to raise external capital. Then I think all these requirements, all this funding, everything is necessary, but not sufficient, right? I personally believe that luck, timing determines fair share of success. But I also believe that if you are at it for a long period of time, you will get lucky. You just need to be at so many places at so many times that you'll be at the right place at the right time by your sheer grit, and luck will come to you. So I think I just want to keep it short and have a lot of time for Q&A. I wish each of you the very best, and every scale up story is success story is very different, and you need to chart your own scale up success story. So all the very best to each of you guys. Maybe I'll stop sharing and take questions. Anubha, is that okay if I go with the questions now?
Sure, sure.
Okay. So how did you handle Indian market known to be a challenge for healthcare costs? Very good question. I think the reality is that the healthcare pricing in India is the lowest in the world. So if you are able to survive and make a profit at Indian healthcare pricing, which means the costing needs to be very competitive, then you will be able to have decent margins to eke out a profit, right? And there is just no substitute. You just need to be razor sharp focused on every single cost item. You need to explore all the suppliers for your costing. You need to watch your human resource costing very carefully. uh, it's just a lot of blood and sweat to make sure that your costing is under control, because pricing is not completely dependent on you. There is only so much the Indian market is willing to allow us to price the service or a product at. So you need to be very ingenious. You need to be very savvy in terms of keeping your cost structure under control. And India is extremely challenging. I fully agree with that. But we have been able to keep the costs under control with razor sharp focus, with very good talent, keeping a sort of a very close eye on all the cost structures across the network that we see. So we were able to handle it. And if somebody is really careful about costing, they should also be able to handle the Indian healthcare costs. The second question is, are global protocols around dialysis treatment different? So every country or every set of countries in the region have similar protocols. For example, there are some bells and whistles which are different in Western Europe, in France versus in US versus in Singapore versus in India. But the core dialysis treatment is roughly the same. The core is exactly similar, but there are new treatment protocols that the manufacturers come up with in order to increase the pricing of their dialysis machines, in order to increase the pricing of their consumables. So the global manufacturers play all sorts of games to keep adding bells and whistles, and that changes a little bit region by region. But the fundamental clinical protocols are universal for dialysis. Of course, every country's, every region's nephrology society makes it a certain input. For example, in the US, each dialysis machine, the center, dialysis center is supposed to have 250 square feet of place for each dialysis machine. If you ask a dialysis center in Mumbai to allocate 250 SFT for one machine, that center will not be able to work because the real estate cost is very high. The capacity needs to be optimized, right? So in India, the average is close to 100 SFT per dialysis machine. So the local ecosystem adapts the real estate sort of luxury factor or the maneuverability factor, but the core clinical protocols are exactly the same around the world, with little bit of bells and whistles being different. With the luxury, if you go to a Saudi Arabian dialysis center, the Saudi Arabia dialysis center will have 350 to 400 SFT for each dialysis machine, completely opulent, luxurious, and so on, right? Whereas in Mumbai, in 300 SFT, we keep at least 3 machines in that same real estate. So the bells and whistles are different. The core clinical protocols are the same. Then the next question is, what was unique about NephroPlus that gave early adopters clinics to gain confidence? So I think that's a loaded question in the sense that the founders have to demonstrate that passion to the early partners, to the customers, to the payers, to the stakeholders, and articulate what is so different about us as compared to the market, right? For example, we came up with a patent pending product called Zero Infection Point Kit. Before NephroPlus, roughly one third of the dialysis patients were getting cross-infected with hepatitis C, hepatitis B, HIV. With NephroPlus, it is zero. So it's nothing but paying attention to detail across all operational touch points, right? And we figured out that infections happen because of sharing of consumables between patients, because of common trolley that is used, and so on, right? So we created product and process to eliminate cross infections, and we were able to articulate our product value, our service value, and our whole differentiation to the prospective clientele, and we were able to sell that differentiated value proposition to the nephrologists, to the hospitals, to the patients, and so on. And hence we were able to we were able to demonstrate again and again. And in healthcare, the word of mouth is the single biggest determinant of your brand building exercise. It's not the number of billboards, number of newspaper ads, but people, satisfied customers, satisfied patients, satisfied hospitals. The market is so bad that if you do a wonderful job, if you do a great job, the word of mouth is extremely powerful. And without investing in this humongous cash guzzling marketing investments, you'll be able to slowly and steadily build the brand. If you want to build a brand in 2 years, you need to go and put the banners, you need to burn a whole lot of cash, you need to raise a whole lot of capital for that, which makes it extremely unprofitable, very risky, but that's the crunch timeline that you're going with. But if you're okay with building a brand over a long period of time, then the word of mouth between the partners, between the patients, between the payers, all that really helps in your brand building. Then question number 4. Are good dialysis equipments manufactured in India or imported? So even until today, all the dialysis machines are imported from US, Germany, and Japan, these 3 countries. India has just recently manufactured a dialysis machine, but it's in an early testing stage. The Bharat Electricals Limited, I think, recently bought that machine making company. It's still very early. The thing is, it's not about the dialysis machines that increases the cost. The machines are a one-time investment over a 8 to 10 year time frame. The challenge is with the consumables. The dialysis consumables account for 35%, sometimes 40% of revenue. So the consumables costing is what hurts the dialysis business, not the dialysis machines. Machines is one time, you amortize it over 8 to 10 years, it doesn't move the needle. So unless the Indian machines demonstrate quality, demonstrate uptime, biomedical superiority, they'll have a tough time to penetrate the Indian market, because the German, the Japanese, and the US companies have done a fairly good job of keeping the pricing very competitive for the market. Then the question number 5: what were the challenges to scale on global platform? I think we talked about the challenges to scale on global platform. One another thing that I would like to add is, uh, historically or in general, the multinationals from the US and Western Europe or Japan were able to dominate various opportunities in the developing world with a high price, high quality sort of a pitch, where they tend to brainwash the developing world and various in the middle markets, that high price translates to high quality. So my pitch to the health ministry of Uzbekistan and Kyrgyzstan and Philippines, various places, is that high price does not necessarily mean high quality. High quality is determined in dialysis world by objective clinical outcomes. Let's publish our clinical outcomes. And if somebody is efficient, operationally efficient, procurement wise efficient, and they're able to pass on that savings to the payers, be it health ministry, be it government of Philippines via PhilHealth, then that player has to be rewarded, right, with the impact opportunity. So uh, in general, the US, the Western European, the Japanese multinationals have sort of brainwashed the rest of the world that quality can be offered only by very expensive multinationals, which is not true. Quality, objective quality, can be delivered in an efficient manner by any company in the world, wherever it is, by demonstrating it again and again over a long period of time. So we just need to articulate our value proposition, and if the payers are smart, they will adapt and they will listen uh, to the value proposition. Question number 6: considering you are from a non-traditional healthcare background, what is the kind of talent you seek for your organization? So I'm from a non-traditional healthcare background because I'm not a doctor, but I've been in the healthcare industry for a long time now. And the kind of talent I seek for the organization is fundamentally very strong intrinsics with a fantastic attitude, right? I firmly believe that skills can be trained, attitude cannot be trained. If somebody has the right attitude and strong intrinsics, they are they can be trained to achieve fantastic outcomes. They can grow very very well in NephroPlus. But if somebody does not have the right attitude or the strong intrinsics, NephroPlus is a very intense company, right? Because we grow so fast, we sort of go into uncharted territory by going overseas. Now in Uzbekistan, many people on this call would not even uh, have read about Uzbekistan before, right? So it's we have a high risk appetite, and because we are growing very fast, the atmosphere is intense. It's primarily relevant for people who want to grow in an accelerated manner by sort of contributing a lot in a short period of time. If somebody is looking for a very 9 to 6 kind of a professional role in a in a $10 billion company, this is NephroPlus is not it, right? So the company has its own culture, DNA, pace. So the people who want to get a lot of training, who want to grow very fast, professionally and financially, for them, NephroPlus is more suitable. And because we are a healthcare delivery company and not a tech startup, which is burning a whole lot of cash, we choose our hires very, very carefully. I still interview all the managers and above at NephroPlus, even though now we run 250 centers, all the center managers included, I do the final round of interviews. So we need to be, the company's success is a lot determined by the talent. And I'm very, very particular about the human resource, the talent, because bad apples can really spoil the culture in a very, very quick time frame. So I'll pause there. Would love to answer any other questions that people may have. Okay. So I think this is a good chance. If there are no more questions, it's a good chance to summarize the conversation. I think early stage of any venture is going to be a very much a roller coaster ride with a lot of challenges thrown at you, lot of non-believers sort of telling you that this your idea won't work. But NephroPlus was able to push through, be resilient, and was able to navigate the chasm of death by jumping onto the next stage. And that's something that all of you, based on my early stage learnings, should look at. Don't worry about naysayers. Don't worry about, of course, you have to learn, understand what they're saying, and try to adapt, try to address the concerns. But you cannot be discouraged and sort of keep changing your idea every time someone is saying, "Hey, this won't work," right? So being resilient is being resilient and staying at it again and again every single day. That's very, very useful in the early stages. From a once you scale up once you build a strong foundation in certain geography like India, then in order to scale up in overseas markets, as I said, you need a profitable unit model, you need exceptional talent, you need the systematization of the architecture. You need to understand, you need to have the talent pipeline in order to scale up, right? Be it scale up in domestic market or scale up globally. So talent becomes extremely, extremely important. So you need to be able to continuously attract fantastic talent, as well as be able to retain that talent for a long period of time. So that's a Herculean task. I think that's the way I would summarize. NephroPlus has been fortunate to be able to cross the chasm of death, and we are able to scale up our firm across multiple overseas markets. And I wish all of you the very best in charting your own success story. Thank you.
Thank you, Vikram, for sharing your expertise with us. It was a pleasure to listen to this session, and I'm sure the participants feel very much the same. Up next, we have a session on how have impact investments remodeled themselves and become more resilient, and a masterclass on how to make agriculture more profitable for the farmers. Do head over to the networking lounge as well to meet Vishnu from Shell E4. Thank you, everyone, and see you all very soon.
Thank you, Anubha. Thank you all.